right. Welcome back, everybody, to the Ownership Club Financial Power Hours. We're live in effect. We're here. It's been a minute, but we're back with our favorite king of the South Side, Mr. Frank Montreux, and he's
Hey,
guest with us. What's
our
your
little
name?
friend.
My name is Tomas Rodriguez. I'm a branch manager over at Team USA Mortgage, and thank you so much for having me.
Oh, what's going on, Frank?
Well, it's been a minute.
It's been a
Good,
minute.
good to see you, Karen, as always. I think the last time we were at that event where we with Chanel was singing.
Yes.
That was fun. That was cool. So yeah, it's interesting. There's a lot. Always, the one thing about real estate is there's always changes going on, Karen. And the one thing that whether you're a buyer or seller, whatever you are, an investor, you need to listen to the smart people. You need to listen to people in the know. We can start right away by saying that isn't the media, because the media presents a lot of false information. The media is going to tell you, they're going to create reality. They're going to tell you what you want to hear to tickle your fear gene. They want you to be afraid, so you just keep listening to them, because the more eyeballs they have, the more higher ratings they have, the more sponsors they have. And at the end of the day, the news is running a business. They're not a nonprofit. They're not here to really serve the public. They're here to get a paycheck, and if that means they can serve the public in the process, hooray for them. But most of the time they don't. So, so one of the things that I've learned in this business is, with the media, they're always saying, the world's coming to an end. And a perfect example, one of what media and other sources did to make this business terrible, the fourth quarter, is the interest rates went down to an all-time low. Everybody's like, wow, 2.5, or 2.75%, 3%. But that was all artificially driven by the government. And see, a lot of people didn't understand that was not market driven. That was not normal. That was a once in a lifetime deal where the banks, the government's buying the mortgages in essence. So what happens is, Karen, they guarantee the mortgages in case the person, the buyer, the owner goes into foreclosure. So when that happens, the banks can offer a lower interest rate. So the rates went crazy wild. Like I've been in business for 43 years. I've never seen the rates anywhere near that amount. So the historical Fannie Mae 40-year mortgage interest rate is 7.74%. So what happened was, when the government made a decision in late fall, we're going to pull the plug. I know, actually, I think it was September. It might have been early. Yeah, September, they decided we're going to stop buying mortgage-backed securities, because they were buying billions of dollars of mortgages a month. So they decided just to go from buying billions of dollars of mortgages to zero. So what did that do? That got the market to go back to normal. So the rates kept accelerating up very quickly. What did that do? That made people think the world was coming to an end. That was a huge platform for news channels to just sit there saying the world is coming to an end. Don't buy a house now. So what happened? In my 43 years, that was the worst quarter. That was the worst quarter in 43 years of my business. And it was because of one word: perception. See, the reality did not line up with the perception. The reality was that we had an artificial rate, and all it did was climb back up to normalcy. It wasn't climbing, and then of course the mortgage companies or the mortgage companies, the media saying the rates can go up as high as 10, and they're stirring the pot, creating all this fear. So they weren't keeping things real. And what happened was, so buyers took a seat, and we had our worst quarter ever. And so what happened is, the market started stabilizing and people got comfortable with, hey, rates are 7, they're 7.5, they're 6.5, they're kind of bouncing all over the place. So then people are like, okay, so this is the norm, this is the reality. So guess what? If the mortgages spike up now a point, people don't take a seat like they did back then, because their perception is lined more with reality now. Back then, their perception was lined with a false reality that the the TV was giving them, the media. Yeah, and that's just we will never see that again unless they artificially drive it down. The market is not going to take us there. I mean, at least if the market has proven it through history that we've never had rates like that before. So at least in my 43 years. As a matter of fact, when I first got in the business, the interest rates were 14.5, Karen. And the year before they were 18%. But here's another thing I've got to. I got a general announcement to the news. I said, y'all that are complaining about interest rates at 7%, how are those credit card payments going for you? How are those 18% credit card? Nobody bitches about that because they don't put they don't put a focus on that, because those are companies that are sponsoring them. They're gonna go with what they can drive people to watch the show with. So now, fortunately, the market's going to be stable, and so a lot of people ask me, "Well, what's going to happen? What's going to happen with the rest of the year?" And Tomas probably has a different opinion than I do. So it's always good to have different people in there and get different positions. I'm going to give you my position based on my 43-year history. So what I always study the market. I'm a numbers guy, and what I've noticed over 43 years is the election year. In the fall, people start pulling back the reins because you're getting all this negative publicity that the Democrats, Republicans are both running the same platform. The world's coming in. You need to vote us in. You need to vote us in. So what happens is that affects ownership. So not everybody is going to stop, but you'll definitely see a slowdown. So if you're a seller, you want to maximize your dollar amount, now is the time, because not only in the fall is there a seasonal adjustment where buyers take a seat and say, I'm going to wait till the spring, wait till the kids get out of school or whatever. You have a typical seasonality too, where people are like, hey, it's 10 degrees outside. I'm not going to go outside and look at houses. So you've got seasonality. Then you've got the historical shift that happens because of the elections. So I believe if everything goes the way it normally does, you'll see a slowdown in the fall. So buyers, also you want to start looking now. You don't want to wait till the fall, because sellers will be pausing, buyers will be pausing. Will there be business there? Absolutely. And it's not going to be like the last quarter. It's just going to be a little slower. Yeah, it could be, 70 to 75% of what's going on now. So there's going to be a definite downshift. It's not going to be crazy. And sometimes, sometimes it's good, sometimes it's bad. But, in this market with, and I'm sure Tomas can talk to you about this as well, too. So in this market, the biggest issue is inventory. So people are having a hard time finding a place to live. So if you look, it's wild, because like I'll run a list for people, and there's like 12 houses for sale in the area, in that price range, where in the past there's been like 50 to choose from. So inventory is way down, and
That's a huge difference.
so there's less homes to pick from, and there's just less sellers that are in the game, and so it makes it difficult for buyers to find their dream home. So it takes a lot of work now for both buyers, most specifically for buyers, because of the lack of inventory. So, what I do is I've hired people. You had Dane on here. I've had people like Dane on here, and then all they do is hunt for off market properties. So that's been the big shift, and it's a permanent shift, because people are just not, people are holding on to their 3% interest rates. Some people are not moving as often. There's a host of reasons why there's not as much inventory on the market. Is there inventory in the market? Yeah, yes, but it's becoming more and more off market. So now you need, for buyers, seek out agents like myself or my team that have off market inventory, and you have a higher probability of finding your dream home. But if you're going to be looking on the MLS, it's going to be, as for buyers, my message to buyers today is be patient, because it's going to be a slow roll. It's not going to be easy. And for investors now, some of the biggest challenges is inventory as well too, finding inventory. And we've also mastered that end of the equation too, because we get a lot of off-market inventory for investors. So we have more and more investors, and I encourage anybody who is more than welcome to call me. I get off-market inventory, and I've developed private funding as well too, for investors. So if you're interested in learning more about private funding, you can always call me, and I can go into the details. But it's actually, it's just rich people looking for a place to park their money. And so I'm the gatekeeper. I qualify you. You're looking at them. So be nice to me.
Please be nice.
Please be nice to the king of the South Side. Heavy as the crown. The other thing that's cool that we do, that a lot of investors enjoy, is I have an appraiser on staff. So when I get a value for a property, to an investor, end value, I've got an appraiser looking at it. So he's saying, hey, if this is the value I give to a bank. Well, that's huge, because a lot of times you look at a property and you think, hey, there's one that's sold across the street for $250,000. I'm using an arbitrary number. Well, what you don't realize is that one that's sold across the street is bigger, has more square feet, and it has more bedrooms, more baths. Well, the appraiser is going to discount for that. So if you think it's worth 250, it may only be worth 220, may only be worth 200. And then you buy a property and you're not going to make any money. And so this is the value that we bring to investors. And, the value that I bring to home buyers is sitting to the right of me. And so he's one of my aces in the hole. I mean, he doesn't do everything, but he does pretty close to everything. I mean, so one of the programs that we do also that we have is the 203K. So if a home buyer, doesn't see a house that's fixed up, we can show them a house that's distressed and get them a loan that will cover their purchase and their rehab as well too. So it's just another way to create inventory. So if it's okay, I'm gonna pass the mic over to Tomas, and Tomas is gonna blow your mind with these programs that he has.
Yeah. So
sorry, I have one quick question.
Yeah,
With
sure.
that 203K, how
Yeah.
long do you have to fix it up? Or maybe you can answer that.
Yeah, so generally they want you to have it fixed up within 6 months, but it also depends on the lender and type of program they're using.
And how big the rehab is too.
Yeah,
So,
yeah.
And you're dealing with city inspector, like city of Chicago, and you got a full gut rehab. So I mean, it could take up to a year. So it all depends. But if it's a light rehab, I mean, it can be done in weeks.
Okay. Yeah. So as far as my platform, it was really based off of solving a lot of the pain points that both home buyers and realtors face every single day. And so I wanted to create a platform that was there to serve all walks of life. I honestly got just sick and tired of seeing a lot of these big box lenders overlook a lot of people that actually had a chance at home ownership. And so some of the programs that we've now have access to are 100% financing for FHA. It's been absolutely popular for our team, and it goes down to 580 credit scores. All of our down payment assistance programs.
So now, wait. So now you're racing through this. Did you catch that? 100% financing. So, I mean, this program is for people. If you don't have money, we'll get you in a home. Okay, so you have no reason, and 580 credit score. You don't have to have perfect credit score. So we can get you in a home with imperfect credit and 100%. If we get the seller to pay closing costs, you just sit back and let us do our thing, find your home, and let him finance it. He's all excited about his product. He's running through, but I want to make sure it doesn't go over everybody's head. The benefits of this is, what are the biggest challenges in this industry with you buyers out there, right? You need money and you need good credit. And what I love about Tomas is is not, a lot of the loan officers I know, they look for companies that pay them more than they care about the programs. Tomas is taking, he's cut his commission to close deals for me. So, I mean, who does that?
Nobody.
People, no, thank you. Nobody. People that care more about people than they do about their paycheck. Because the other thing too is, if you take care of people, they're going to bring business back to you. I mean, that's how it works, man. So anyway, go ahead,
Yeah.
Thomas. I want to make sure you were just, I know you're all excited. You're down about, save the world and stuff, but we got to let this sink in.
It was my Napoleon syndrome kicking in, trying to conquer the world every day.
Yeah, you are.
No, I absolutely love what I do. I'm a huge nerd when it comes to this stuff. And all of our down payment assistance programs, they're a lot more flexible than IDA. IDA is probably the most popular down payment assistance program that's out there, but it can be very restrictive. You have to have a 640 credit score minimum to qualify. They don't manually underwrite the loans, and you're capped at a 45% debt to income ratio.
So hold on. So let me explain what that means to the common man, because he's throwing a lot of terms out at you. So the 640 credit score is a lot higher than the 580. So there's more people out there with 580 credit scores. So there's going to be a lot more of you that qualify for his program than would for IDA. When he says a 45 back end ratio, basically I'm just going to put it in simple terms. His program allows you to buy more house, whereas IDA doesn't want you to buy as much house, because they want to restrict like what they believe is the risk of foreclosure and so forth. So rather than care about you so much, they care about their numbers, their foreclosure numbers. He's got programs that are there for people that, it's almost like a second chance program. It's like, hey, look, you're not perfect, which we all have skeletons in the closet, right? We've all done something, or we're all in a place where we wish we're working on ourselves and getting better. What I love about him is he's always looking for the best programs for people that need loans, the people that have imperfect credit, the people, so there's a lot of these loan officers that I can bring in there. They talk IDA. IDA is not that good compared to what he has. And IDA, you still have grant money, but some of those grants you got to pay back, and it's not real grant money. And then having, of what's called a 45 DTI, that really restricts your buying power. In this market, you can't afford to have somebody say, I can't let you buy as much house, even though you qualify for this. And even though everybody else is doing it, if you get this grant, we're going to handcuff you, and you have to, and it's hard. There's a little inventory as it is, all the more reason to get, and his rates are cheap too, compared to a lot of other loan officers. That's what I love about the guy.
Yeah. So go ahead.
No, I never knew you had to pay back a grant.
A lot of the IDA grants, yeah, that's it. Yeah, they pump fake you, man. Yeah,
a grant was free money.
So
not always.
IDA can be a double-edged sword. Does it help a lot of people get into homes? Yes, but in my opinion, it's not the best program out there. And there's a few reasons why. Let's just say, their most popular grant offers $6,000 in assistance that you technically don't have to pay back. However, there are some catches to that. You have to pay the 1% origination fee. You have to pay your lender fee. Sometimes they charge a processing fee on top of that, and then a funding fee. So in reality, are you actually getting the $6,000? Sometimes you're getting half that amount. And then if you sell or refinance, depending on the program, between 5 and 10 years from the date that you close, you have to pay it back. So as a home buyer, I got to pay that back, but I didn't even get all the assistance to begin with. To me, it makes no sense. And especially in this market where, we're anticipating at some point, we don't know when it's going to happen though, rates are going to drop. Those people that want to refinance to better their situation, improve their cash flow, reduce their rate and payment, they're going to have to pay back the assistance before they can do that.
So Tomas, I'm going to put you on the spot. So the national average for interest rates right now is I think I saw 6.875. So where do you stand today?
For FHA,
Mhm.
I could easily get to 6.375 without any discount points whatsoever.
And if you get discount points,
I can get you into the mid fives.
mid fives. Now I bet I can call some other loan officers right now, and I'll tell you they'll talk around seven. They'll talk 7.125. They're or maybe high sixes. See, this is one of the reasons why I'm attracted to Tomas. When I met him and I heard his interest rates, I'm like, what? I mean, these are way. They're like a half a point to 3/4 of a point, to even a point lower than a lot of other people. What does that mean though? I mean, you're listening. Okay, well, that's cool. What that means is your payment's going to be lower, and you're going to save money. You'll have more disposable income. Do you want to give that money to the bank, or do you want to have it to spend on things you like, or save, or pay down bills? Help contribute that to your car payment, to your kids' education, whatever. That's what the interest rate means. That's why, more importantly, you can qualify for more house because you have more. The higher interest rate is, the higher your payment is, the less you can buy. So, or you can get the house and have a cheaper payment. You go to ABC Mortgage Company and they charge an extra point, and you go to your company, charge an extra point. I mean, that could be $100, $200 difference a month. How am I doing on my numbers?
No, you're 100% correct. To give you an example, we have just so much flexibility in interest rates, and that's also because of how we're set up. Ultimately, we want to put the consumer and the realtors before profit margins. At the end of the day, like, I don't want to be that person that says, no, you can't buy this house because I'm not making enough money. To give you an example, it was actually my first deal with John. There was a client that really wanted a house, and it was just outside her pre-approval, and she loved it. She's got kids, she's got a family. This is the same school district that she's looking for. It was perfect. On paper, if I look at the standard rate sheet, she doesn't qualify. Her payment's too high. So in order for her to get that house, again, I'm not going to be the type person that will say, hey, I'm not making enough money, so you can't buy this house. We cut our margins. We got her an interest rate that was significantly lower than where the market was. And that was a year ago. So when people were pricing out FHA loans at 6.875, some companies were even charging fees for that type of rate. We were able to get her just under 6, so she could buy that home, qualify.
You can say what you want to say, but I don't find people like him in this earth. So I'm the same way. I want to put deals together, and I want to help people. And that's what drives me. And when I found this guy, I'm like, I found my, one of my soulmates. I found my ride or die, bro, on the mortgage end. And, you talk to a lot of loan officers, and I'm like, why did you move to this company? Oh, because I get X amount of dollars more per transaction. I'm like, okay. And where's that money going? It's in my your pocket, where I remember I had a deal where things blew up at the end. Something happened with the buyer with their income, and they couldn't qualify for as much. He ended up like taking 0 on the deal just to get it done. Who does that, man? Yeah, of course. Well, you can't do it if you have one deal a year, obviously. But when you're doing a lot of volume, you can, and you want to help people, you can do it, man. Yeah.
So not to get too personal, but the reason why I do those sorts of things is because I can't help but think of my upbringing. I grew up in Lakeview, which, for lack of better words, is a yuppier neighborhood, but I grew up at near poverty levels. And my mother, she didn't sugarcoat anything. She told us why we were going to the food bank, why we couldn't afford this or that. She was very blunt with our situation. So when she bought her first home, she ran through a lot of difficulties I see buyers still struggle with. The loan officer that doesn't want to give her the time of day because she's not buying a $300,000 house. She's looking at the low $100,000 range. She's a first-time home buyer. She needs a lot of handholding. She doesn't know what she's doing. This is her first home purchase. And all it took was one person to really take their time, explain things, and help her get into that home. And so, I don't mean to get too emotional here, but I can't help but think of my own mother in those situations. I don't, it's not like you go to Walmart and buy a house every single day. It can be very daunting to people because there's not only a lot of emotion, but where do I even start? And that's where Frank and I really come in. We're there to not only guide you through the entire process from A to Z, but even after you close, hey, we're still best friends. I'm not going to, leave you hang to dry. We're not a churn and burn type of team. We're there to not only help you guide you with your first home purchase, but also we're there if you have any questions, you have any concerns. Hey, you just need to phone a friend. We're there. But also we want to guide you to create wealth through real estate. And so for me, that's always been my mission, is helping the people that otherwise wouldn't have had that chance at home ownership.
It's a big deal. It's a life changing experience, and like you said, a lot of people they just don't know because um, generationally, a lot of people, their parents and grandparents, they've never owned real estate before, so it's it's a big deal. So for you all to walk them through it, I commend you for that.
So to your point, of what a lot of people don't understand is that, especially on the South Side, the majority of people, their wealth when they retire is their house. If they're going to retire and say move south, they sell their home. That's their nest egg. That's their retirement money. I mean, usually, I think read a stat that 90% of their retirement funds come from their home. So, they may have their pension, and they're like, oh, well, you're either going to make your landlord rich, or you still got to live somewhere. You're paying somebody's mortgage. You want to pay your mortgage, the best interest rate, or you don't care. See, another thing too is that drives me crazy. This loan officer, he's in my church, and I don't want to upset him. I'm like, don't tell him this is what you got, and tell him to match it. And if he doesn't, tell him, okay, well, I got to go with this. Unless you can match it, then I'll catch you on the next one. We'll get to that. I try to tell people, do what's right for you. And I got to see this guy every Sunday. I'm like, so it's only a one-way street. He's going to take advantage of you. I mean, I've had loan officers say, why aren't you dealing with me anymore? I'm like, because your company has changed all their positions. They don't have grants anymore. They have nothing to help the clientele that I work with. And he goes, oh, I met this one guy. Oh, I did all these deals for you and stuff. I said, the deals that I gave you, you did all those deals. So see what happens is a lot of loan officers are what I call order takers. So we bring the business in, they bring it from A to Z. And a lot of times the deals are fairly easy to do. And they're like, I don't how are they doing me a favor? I mean, there's so many loan officers out there. Unless they're bringing me business, then we got a different ball game. But if they're not bringing me business and I'm bringing them business, then I'm in the driver's seat. And if I remember this one guy saying to me, well, what do I need to do to get your business? You need to go to this mortgage company, and then you're able to help people in my community. Otherwise, I can't. I gave you the business over the years, but you have nothing to offer now. Just a standard loan is everybody can do that. And then the other thing too, I want to tell people, especially buyers, this is so important. There's two types of people in this business. It's actually in any business when you look at it. I call them the finders and the minders. So the finders are the type of people that are the partiers. Let's go out to ball game. Let me meet you out for a couple of drinks. Let's party, and then they expect you to give them business.
Right.
Okay. Now those people normally are not good minders. They don't understand the business. They don't know how to get deals done. If there's an appraisal, it's like him who's more of a minder. And this guy knows his programs. He knows how to get you across the finish line, no matter what potholes are in the road. I'm using potholes because we're in Chicago. So I'm sure everybody can relate to the hard deals done. I've had loan officers say, just bring me A buyers. I'm like, you're not. I'm thinking myself under my breath. You're not my people, man. I want to get those people that have dings on their credit, that have issues, that have thrown in the towel, and they've said, I don't know. I'm going to rent for the rest of my life. I'm like, no, you're not. I said, not if I can help it. How about if I can? And then so I'll have them look at I remember, here's a perfect example. I had this guy, 55-year-old man, come in he's looking around. Man, I just kind of threw in. He used that term. threw in the towel, man. Two of my daughters have homes. I just don't have the right credit score, and I've been told, and I'm like, I got a loan officer right here, and so he ran it. He looks at, he goes, if he does what I tell him to do, I get him done in 60 days. So I turned to the guy. I said, "You game?" I said, "You want to take this ride for 60 days with me, brother?" He goes, "Yeah." So I got him on my website. He is a bad boy. So he's like, he moved in this house. He's one of these really excitable guys. And he goes, Frank Montrell Holmes is no lie, no money down. And then he is, I went over to his house. You can eat off the floors. He takes, he's so appreciative for us getting him the home. And there's a guy that, look, I'm talking to you people today that, there's people, first of all, there's people that have perfect credit, they're perfect, God bless them, and nothing's ever happened wrong to them. They do all the right moves. We all know those people, right? And so, they're going to buy houses. Then there's other people that have bad credit or then are not working, whatever. Or they're in a position to buy that they don't want to buy, and that's cool. Do your thing. But then I'm talking to people today that you think or or you've been told that you can't. We can help you, and we can get you in a home. I can do for you what I did for that guy, that 55-year-old man that had credit score in the fives. We actually in the low fives. We helped him within 60 days get it up in the 580 range, and we got him home. And I mean, it's like the guy was like accepting Christ. I mean, it was so emotional, man. It's so cool when you help people, and it's so rewarding. I mean, yeah, money is good, and we love money, of course, but we also love helping people. And that's why, I surround myself with like-minded people, because all they do is speed me up, and all they do is help my brand. So the finders, I had a loan officer come at me last year and say, "Hey, can you want to go to a Bulls game?" I'm like, he goes, "They're second row on the floor, mid court." So I know what those tickets cost.
Mm-hmm.
I'm like, "Yeah, no." And he goes, "What?" I'm like, "No, I don't want to go." And so he goes, "You're kidding me." I'm like, "I'm not kidding you, because I know what's going to happen. If I go, I'm going to feel like I'm obligated. I don't even know you, man. I don't know anything about you. You may be a horrible loan officer. You may be a horrible guy. So I don't know. You may be the best guy in the world. I don't know that. I got to get to know you first. Let's create a relationship first." I said, "If you want to send somebody on my team, take Aaron Gaines and take him with you." And so Aaron went to the game, and then we tried this loan officer out, and this horrible guy. He doesn't. I called him like 5 days in a row, and he didn't call me back. So he's one of those guys that when something goes bad, he disappears on you. Then he pops up later. "Hey, how's it going, buddy?" Like, nah, it doesn't work that way. But finders are the type of people, like, if you're perfect and you want to have a free meal or a free beer, go see a finder, man. But if you want to get the lowest interest rates, get yourself in the best position, get the lowest payment, the best program to fit your needs, then you need to talk to Tomas, because this is what we do. We are here to help you, and we're not blowing smoke. I deal with minders. More important for me to be a minder than a finder. Fast talking, smooth talking. A lot of finders are very believable. I'm like, "Oh wow, this guy looks. I think this guy can, make me a bazillionaire." And then a lot of these finders are the crooks. They don't know about their business. So we're doing sub-2 deals, and we're doing short sales. So I need to get back in that game and be able to help people at a higher level. But this guy is the show right now. I mean, I deal with a lot of loan officers, and I got several in my wheelhouse that are friends of mine. This guy's obsessed with this. Beat you through excessive value and through excessive hard work. I'm not like, "Hey, I've worked my butt off for 5 years. I deserve to get to get all this money and screw you in the process." I don't do this, guys. Hey, look, I'm gonna tell you how I work. He lets off the gas, he's gone. I'm looking for somebody else. So, and the thing I love about him, he carries that same gene. He's got to win, man. He goes, hey, I got this new program, man. You're gonna believe I got this new I-10 program. To help people. I got this new program with credit repair. I mean, it's the kind of stuff that I do. I hunt, man. We hunt. We want to provide. It's not like, I'm going to kick back and whatever my company has, I'm just going to offer, and I'm going to, take people out for lunch and dinner, and they better give me business because I just spent $100 on their dinner, So we don't work that way, man. We'd rather spend money in a home buyer seminar or run an open house, bring people in, educate them. We're here to educate you today on the importance of finding the right person, the right people, the right team to work with. Don't fool yourself. Just because a person is your neighbor, just because a person is fast talking, you need to dig deeper and find out what they are all about. Find out, are you getting the lowest interest rate? And I would, if you got somebody that you like and you love, you're like, I'm gonna give this guy the business. I would challenge you to call Tomas up and get him to verify what the lowest interest rates are on the market, because he will tell you. And can you imagine, if you get the seller to pony up 2 points, you can get your interest rates in the fives. That's crazy, man. That's just, that's the kind of stuff he does, man. He offers all these alternatives. So, and there's a lot of sellers out there that'll pay closing costs credit. There still is, so you can, one way or another, you're going to, you work with us, you're going to get the best value. You might, we may not take you out to dinner or to get you drunk, but we're going to get you the best value.
I have a question.
Yeah.
With your program, so you have the 580 credit score. So what other requirements do you have, like income or?
So we don't necessarily have an income limit.
Okay.
So a lot of down payment assistance programs, if you make a little bit too much money, you can't get the assistance.
So let me interrupt on that. What that means? Typically, a lot of these programs, they cut you off like around anywhere from 85,000 to 125,000. So you and your spouse combined make 130,000 or more. You're out on a lot of these programs. There's no limit. You can make combined 500,000 and you can still get the grant. So
what's a minimum income limit?
Oh,
I would say,
depends on interest rates.
yeah, assuming zero debt, probably 2,800 is what we can cap in.
Which is times 12 is what, 35,000 or so.
Okay.
Yeah,
So
2,800.
35,000, and you're going to get an entry level home. You're not going to get $1 million house in Oak Brook or something, but
it's a start.
But it's a start, right? So, but that's a great point. So, what a lot of people think, like, oh, I want to get my dream home. So, here's another way to open up opportunities for you: buy a starter home, and then values keep going up. If you buy a starter home and hold it for 5 years and build equity, now you got $50,000, $60,000, $70,000. And now when you sell the house, you've got that for your down payment to get your home that you want. So, you don't always have to buy your dream home from the start. Most people don't. Most people don't buy their destination home. They start what they can afford. But look, that's why it's important. Find out what you can afford, first of all, before you start getting all excited and looking at all these really high-end 5,000 square foot homes, the jacuzzis and all this stuff. Before, know that, have a plan. Know that you can get there. And we can show you, like, this average, this home in this area is going to appreciate 5% a year. So let's figure out how much in 5 years you'll have. And then in 5 years, let's look around, and by then your income's going to be greater and all that. So you're going to be able to get a better house, hopefully your destination home. Or you may end up in the starter home and say, man, I'm glad I didn't, spend all this money on a house. I've got a house that meets my needs. And I don't need to go any further. I've got a payment I can afford. I can save money. So
one of my clients actually used that strategy of getting a starter home, and she essentially house hacked her way into building her own real estate portfolio while having to put 20% down on every single property. She came to me about 5 years ago. She bought her first property, which was a 4-unit. She bought it with FHA financing, and she bought it with 3.5% down, lived in the first unit, and she rented out the other units. And before we even account for the tax benefits of owning real estate, she was already coming out ahead by paying less than she was renting.
So, so he brings up a good point. So, I mean, ideally, if everything's available, there's what we call the 4-3-2-1 that we push on buyers. So if like we got a 4-flat, we're working on getting right now. So you buy the 4-flat FHA, minimum down payment, and then you hold on to it for a year. You get the property generating, making money. Then you can buy a 3-flat. Then the same thing, hold on to it for a year. Just keep going right down the line. You want to have your house being paid by these other income generating properties. So that's the goal. And then when you retire, now you've got 4 properties when you have this mass amount of retirement money. So that's one thing we try to do. There's just not a lot of 4-flats around, unfortunately. So we've got one. I'm excited because we were pricing one this morning, and we're waiting for it to come on. So it'll be a good one for the whoever buys it. And we're going to present that that philosophy for them. Just don't buy even if you just buy a 4-flat too, that's going to help pay your mortgage. You live in one and help the rest pay for your mortgage. You live rent free. Not only are you not paying your landlord, you fired that son of a gun. You're building generational wealth for you. It's like a win-win situation. And you live rent free, man. I mean, come on.
We talk a lot about, it could be hard saving for a down payment. Interest rates are the way they are. Those are all valid, can be valid obstacles. But in my opinion, I think the largest obstacle is honestly knowledge. And to your point, the media portrays this story that it's almost impossible to own a home. And I was talking to a buyer a few months ago, and he goes, "Yeah, I submitted that inquiry online, but I don't really want to buy. Interest rates are too high. It's not worth it." And I go, "What do you mean?" And I knew what he meant. I'm just playing dumb. And he goes, "Well, interest rates are too high. Here it's a really bad time to buy." I go, "But what specifically about the interest rate is causing you not to buy?" And I go, "Because I have clients that are doing well in high rate markets and low rate markets. People generally, they don't, the people that are really in tune with real estate know that real estate's only going to go up in value. So the sooner you get in, the better it is." And he was explaining, "Well, my rent is this. I don't think I'm gonna be able to find a mortgage that's around that price." And I'm like, "Let me show you something. You got a few seconds? I'm going to show you a strategy that my clients have been using to win in today's market. We've got a program that allows you to finance 100% of the property, goes down to 580 credit scores, and also allows you to buy a 2-unit property. Here's why that's important. I could then use 75% of the projected rental income on that second unit to help you income qualify for that property. And you could use that rent to offset your mortgage. Now, before I even account for the tax benefits, such as the depreciation of that real estate, you're coming out ahead if we're just comparing apples to apples on your dollar amount that you pay for your monthly housing."
Newsflash: interest rate has nothing to do with your equity. See, people miss the point. People say, "Oh, I got to have interest rate. First of all, what's important is your payments, which consists of your principal, interest, taxes, and insurance. But it includes the price of the house and the interest rate. So, I mean, houses are going up. Why don't you complain about the price of the house? Because you're so stuck. People are so stuck on these interest rates because they've been brainwashed. Time to buy. I mean, Diane Olick from MSNBC has been saying since 2014, you should never buy a house. Can you imagine for the people that didn't buy, if they decided to pull the plug in 2014? Can you imagine? I mean, these people have 100, 150. There's people that live in like Washington Heights that have houses that have literally doubled. I mean, they've gone up over $100,000. Can you imagine if they lost all that money? This is what we do for you. We put things in perspective. Perception is everything, and the media wants to distort your perception from reality. What we do is we give you reality, and we want to align. If we can align your perception up, and you can understand. Look, your focus is on the payments. Stop this. Well, the interest rates. All this. The interest rates are part of the puzzle, and newsflash: you can always refi at any time too. But here's the key. The key is if people said in 2014, "Hey, I want to wait for the rates to go down another 2%," and then they They waited till that COVID time when they're buying, when they did go down 2%, giving your equity away. That equity is yours. So the way you need to look at it is, I got to live somewhere. Why am I giving my money away? Because when you look at it on a piece of paper, Karen, and by the way, I want to give a little shout out to Karen, my friend here. So the name Karen has a bad rap. So, and it's not right. But this is, hey, everybody, this is the good Karen. So the Karen, I know there's a lot of bad. This is, again, perception. Perception. Everybody thinks, oh, they use the name Karen mean bad. No, that's perception. That's what media has done. See, there's another example. This is the real Karen. This is what Karens really are like. She's giving, she's caring, she's loving. Karen's a good name. So stop it out there. That's her. But yeah, so what you need to do is align your perception with reality. The reality is, the longer you wait, the more money you lose. Every day that you rent, you're making your landlord rich, and you're giving that money away. Interest rates don't matter. What matters is the entire payment. The interest rate is not tied into equity. So in other words, if a house is going to go up $100,000, it doesn't matter if your interest rate's 18% or 4%, that your house is still going to go up $100,000. Get with the program, guys. Stop listening to the media. Call people like us. You can call us anytime. We'll be more than happy. Look, I have people call me up all the time, asking me, hey, can you tell me what my house is worth today? We're always giving free, what we call equity reports. So it takes me a matter of 10 to 15 minutes to run, because I do it so often. I can run a quick update on evaluation of your house. I can show you what it was worth back when you bought it, or a year ago, and what it's worth today. Important information, because you may not know this. You may not have been told this too. With your equity, not only can you use it to put when you buy another house, you can also pull it out and use it to buy income producing properties to pay for your, what's that mean? What's that do? Hey, you want to pay your car payments down or pay them off? You want to pay for your kids' college education? It is money that's sitting there dormant, that's not being used, that you have at your fingertips. You got to get qualified for it, and you have to qualify for it. But if you do, then by all means, take advantage of this situation, and we'll show you how to use the money to make money.
Awesome. So, Frank, how can people call you to get this information, to get find out how much their house is worth now?
So you can call me, and like now I wouldn't be able to answer, because I haven't loved it.
Well,
you can
not
text
now.
me. Yeah, you can text me, and anytime. And my phone number is 708-307-0777. Again, that's 708-307-0777. And let me just say this. I'm an early riser. So, and I've had people put me to the test. So I remember I was speaking in front of this big group of like 250 people. And I said, hey, I get at 4:30 every morning. So my phone rang at 4:30. I'm like, hello. Yeah, I'm Joe so-and-so from the meeting yesterday. He goes, I just called you to test to see if you really got up at 4:30. I'm like, you son of a, you're going to buy something for me for that, bro. So anyway, yes, but I mean, most people don't rise that early, but if you want to call me at 7:00 in the morning, that's cool, because I like, usually when Karen, at 9:00 in the morning, it gets crazy. It starts getting wild. So usually 9 to 5. So usually the best times, I mean, you can still call me during the day, but probably less likely to be able to chat for an extended period of time. But early in the morning, easy. After 5, easy. And I love helping. Do not feel intimidated by calling me and talking to me, because I love helping people, and I will help you. And one last time, my number is 708-307-0777.
All right, Tomas, if someone wants to reach you to find out about these interest rates and how to get into a house, how do they reach you?
They could always give me a call or text. I love what I do. Same thing as Frank, call or text me anytime. My phone number is 815-981-2702. Again, that's 815-981-2702. 2702, or you could go to www.loanswithtomas.com, and you could actually go on my calendar and book an appointment for free at a time that works best for you.
Oh, that's awesome.
That's cool.
All right. So what we're gonna do is we're gonna take a quick break, but you can reach me at American Dream Tax with Karen on Facebook or on Instagram, Dollars and Taxes. We're gonna take a quick break. We're gonna be back with these two guys for more information, and they're gonna keep dropping these nuggets. We'll be back on IntellectualRadio.com Ownership Club, y'all. We'll be right back.
Looking back on all I've done, I hear the voices calling. You feel your heart it's so far. It's so far. So far. Looking back at all the things that I've seen, I wish that I could build a time machine. Do the right thing, change the world, take that chance, kiss that girl. But it don't work that way. I love my rear view mirror. Hell, what can I say? I credit my mistakes for half the things that I know. Stuff to live with, hard to come to grips with. The fact somebody switched up the beat, now we can't dance. Better yet, we at different tempos. Me and you close, ain't what we was meant for. Wait, so far. It's so far.
All right. So we are back, the Ownership Club on IntellectualRadio.com. Before we get started, just got to make a couple of quick announcements here that next Saturday on June 29th, Corliss High School, class of 04, celebrating the 20th high school reunion. It's going to be at Skyway Bowl for the Ownership Club Super Sexy, part of the Ownership Club Super Sexy Saturday. So it's an all alumni thing. So everybody come out for the Black and Gold, the Trojans. It's going to be at 9915 South Torrance Avenue in Chicago. It's a $10 general admission to get in. If you want to bowl, it's $30 if you want to bowl, and also get a free drink ticket. That's the VIP. That's $45. So come on out. We also have the American Dream Tax is still doing the $19.59 to purchase the book, $1 million worth of tax. And with that, you get that 12-week tax mastery class, 12-week free tax mastery class included with the purchase of the book for $19.
That's a lot of value.
Yes.
For 1995.
1959, not even
That's like
1995.
$2,000.
Yeah, that's
yes.
yes.
You
That's
guys are getting that stuff.
yes. So if you have not purchased the book, please purchase the book. Go to a milliondollartax.org, or you can go to americandreamtaxoffice.net and purchase the book there. The class begins Saturday, August 3rd. It'll be from 9 a.m. to 12 p.m., or you can call 336-516-9026 to get the book and information on the class. We also have coming up the small business seminar, which our man here, Frank's gonna be a part of. It's gonna be Saturday, July the 6th. It's also gonna have Ro Davis, Roland Davis, and our very own Brian Fleming. It's called Small Business Saturday. That's part of the Ownership Club 5th anniversary. So Brian's going to be talking taxes. Frank, of course, real estate. And Ro will be talking business credit. Roland will be talking personal credit, and that will also be broadcast live on Sport District Radio. So you can download that app, Live 365. Later on that evening, we're going to have entertainment featuring Chanel Ellis and Lamar Creation, Bree Michelle, and throughout the day, we're going to have some other small business talk. We're going to have Lexi RC talking music ownership, BB Trinette talking about radio personalities, Joshua Desmucas, he's going to talk insurance, Kerry Washington is going to talk about pop-up vendors, and Shy Bliz will be talking artist publishing. We also will have Mika Saunders. She's also going to be talking about Primerica um insurance. And so we got a lot going on that day. That is going to be at 79 Barbecue Smoked Meats, 1719 River Oaks Drive in Calumet City. Again, that is part of the Ownership Club's 5th anniversary, and that's going to be going on all day starting at 11 a.m. To about 1 a.m. So it's an all day event. So we invite you guys to come on out. All small business owners, please come out and network with us. If you're a vendor, if you want to come out and do a pop-up, please come out. Let me know, contact me, hit me up, DM me, call me 708-858-0037, DM me, like I said, and that's it for that. For right now, we'll get back to that. So let's get back into this real estate thing.
Can I just add one more
Sure.
thing?
And we're celebrating Frank's birthday also.
Thank you. So I was going to say,
happy birthday.
thank you. July 4th is my birthday. So come out, have a drink with me that day. But more importantly is the small business. There's just so much opportunity out there. And so if you're looking, if you're happy with where you're at in life, cool, do your thing. If you want to look at opportunities for you to make more money, please come out and explore the opportunities. A lot of times, it's the education, it's the exposure to the opportunity. You just can't believe how much opportunity there is out there. The people that are active and are learning are the ones that are exposed to these, and then you can make a decision from there whether it's right or wrong for you. But if you're not aware of the opportunity, then you can never better yourself. But if you're looking to, there's a lot of people that carry a second job and some of these opportunities don't require you to give your left leg and your right arm, So come check us out. We've got a lot of great things going on there. We can help you. So please come on out. It's an all-day affair, and you'll not only learn a lot. We're going to entertain you as well too. Yes. We're going to have a lot of fun.
July the 6th, be there. 79 Smoke Barbecue Meats. So, Tomas, I have a question. We have a question posed for you.
Okay.
So, if you have not had your taxes filed in quite a few years, 4 or 5 years, can you still be able to qualify to purchase a house?
Yes, there are a lot of programs that are actually designed to fill this pain point. These programs, loan officers will either refer to them as what we call alt-doc loans or non-QM loans. And essentially all that means is it's a different type of loan outside of like conventional FHA or VA. And so you might hear terminology about like bank statement financing. There's also what we call full doc financing as non-QM, just means that you don't meet the standard criteria. So a lender will essentially hold that loan and allow you to have guidelines that are more flexible so you can qualify to purchase a home. So the way that we go about documenting your income is really all based on your situation. If you're self-employed, I may suggest a bank statement program, but based on your deposits, it might be beneficial for you to do a P&L program instead. Or
profit and loss.
Yeah.
So maybe explain that a little bit more too, because a lot of people aren't, familiar with that term.
Yeah. So what
does that mean when you say P&L?
So it's a profit and loss that's prepared by a CPA for the program. It can be self-prepared. It has to be prepared by a CPA or a tax preparer. And what we would do is average out the income that is on that P&L, take your last 2 months of bank statements, and we use that as your income to qualify. Tax returns, we're not verifying with tax transcripts that you filed your taxes.
So it is possible. Now, it's a higher risk situation for the lender. So there's a cost to it, and that's the down payment's a lot higher. So you can't it's not 100% or 5%, and it varies depending on what's the downstroke today on it. Is it
So we've opened up the credit score requirements. You know, we can go all the way down to a 575 credit score.
Jeez.
But at a 575 credit score for these programs, you're looking at about a 40% down payment.
Yeah, that's
Now,
tough, man.
if you're at 660 for a credit score, you know, then we're looking at 10 to 15% down, depending on,
That's
again,
not bad either.
how we're documenting the income. And if your score is a little bit higher, we could potentially take you into a 40-year term. Now, what that would do is, yes, your rate is higher because of the type of program you're doing. But if we're doing it over 40 years, you know, that's going to give you the time to have a payment that's more comfortable on a house that you like, so that you can get yourself in a position like maybe filing your tax returns, catching up on those back taxes, whatever that case may be, so that you can refinance then later on and in an even better situation with even lower payment while reducing your term.
So here's what I would suggest. If you want to do something like this, call Tomas, because the easiest way to do it is to just hire some accountant to do those forms for you, the P&L forms. Then you got your income there, and then if you have a credit problem, if you're not 570, if you're 575, you got to pay the piper. So what you want to do is work with Tomas.
Get that credit
He has a
score
credit.
up.
Yeah. I know you've got other people here too that do that. Get that credit score up to 660, so we can go with the lower down payment, and then you're in the game. But yeah, there is no. I wish there was a 0% program, but they never have it. But a lot of times these are special programs. They come and go based on the economy. Now they're bringing them up now because there is less activity. You know, when the market, the great thing about, you know, like the market, there's less trading going on, less buying, selling going on now. So what that does is that spawns a lot more programs. In other words, mortgage companies will say, we need to create more business. How do we do it? Let's do programs like this. When the market is flying and like the rates are down to 3%, and there's all kinds of deals flying, they're not going to be as generous. So now's a great time for you to go and see if you qualify and start working on your credit right away. You know, fortunately or unfortunately, however you want to put it, Karen, the market probably is not going to rebound to crazy times unless we have a shift in the market, which, you know, typically we do have shifts in the market anywhere. I've been in, you know, the business for 43 years. I'm in my 9th major shift. So, you know, it can be anywhere from 5 to 13 years. We'll see a shift. So another shift will come. Another crazy event will happen. But barring that, now's a good time to start working at it. And if you don't, you know, if you're self-employed and you don't file taxes, or you don't file taxes in your W-2, use this program, because then you're still getting back to what I said is important, is your payment and building generational wealth. You can build generational wealth without filing taxes. So don't let that stop you. Is the message we're sending you out today. You know, if you're not doing it, and you stop and you use this as a crutch for not buying a home, imagine all that equity that you're losing every year. You know, so by all means, contact Tomas and get in the game. We'll help you.
And in some cases, these specialty programs can have payments that are pretty comparable to a conventional buyer. In addition to that, you know, like you said, that market can be volatile. There's investors that change their guidelines all the time. And that's the beauty of what we do, is that we're not limited to what we only have in-house, like a direct lender. With me being a broker, I have the ability to shop close to 100 lenders using only one credit report. And that does a few things. It helps me get the best terms for my clients, the best programs, and a lot more options they otherwise would have had. But then let's say lender A all of a sudden doesn't offer this program. Well, I had lender B and C already lined up in case something happened. And I could do all those things while preserving my client's credit.
So you know, I talked about earlier, you have the finder minders. The finders, they have one, you know, they're like, hey, let's throw it up against the wall, see if it works, right? And then if it doesn't work, oh well, too bad, so sad. You just spent $1,000, and because I'm too lazy to learn my craft, you're out of the $1,000. Whereas this is why I partner up with him, because he is going to hunt and he's going to find another program. And there are so many different programs out there that people don't know. The problem is a lot of these loan officers get locked into one company, and they have one way, and it's one, just like religion, it's one way, and it's my way or the highway. Well, a lot of mortgage companies are that way. It's like, hey, we only have one way of doing things, and we keep it simple. And either you work or you don't. Well, I've had so many loans that, here's where it works. And I want to talk to people today about this too. If you're a home buyer and you just got rejected, by all means contact me. I've had, even if I'm not involved in a transaction, I don't care. I just love helping people. I've had people call me and they're like, hey, who's your hot loan officer today? I got a deal. I'll tell you, I had this one. I'll give you a perfect example. I had this one lady, and she, her son wanted to buy a 6-unit. And she's like, I don't know where to go to. I'm trying to get my son into real estate. And I'm trying, and I said, I got you. So call this lender. She called me up like 60 days later, crying, bawling like a baby. Thank you so much. Blah, blah. I never got a dime. I never got a cup of coffee. I mean, throw the king of the south side a cup of coffee. I mean, I do like coffee black. So, but anyway, but seriously though, I didn't care. I mean, I was just like, it made my day, and it energizes me. That's the stuff that gets me going. When I hear that, I'm like, and really what is why I got in this business. I got out of accounting because I felt like I was just existing, just crunching numbers all day. I didn't see anything. When I got into real estate and I helped this lady. So this lady was told by her loan officer they can't get her a loan. And I mean, the story is kind of crazy. I won't go into too many details about it. But I said to her, I said, do you like me? And she goes, oh yeah. Because I'm kind of a crazy bouncing off the wall when I'm showing houses, and I have fun with it. So we had a lot of fun showing a house. And then I said, do you trust me? She goes, yeah. I said, well, will you go to my lender? And I got her the loan, and she's coming out of the closing, and she had this keychain of all the keys. Now these days we have like one key fits all doors. So this guy had like 20 keys on a keychain, and she looks up and tears coming out her eyes, and she goes, "Thank you, Lord." And I pulled over and cried like a baby. Man, I was like, wow, I can help people. Yeah. This is cool. Because I have that gene inside of me. That I have that's what was missing in my heart, was helping people. That I didn't get that I wasn't getting fed as an accountant. I was making great money. I mean, man, Arthur Anderson was killing it, man. They were treating me like they didn't even know I was the king of the South side, but they were treating me like a king, for lack of a better term. I mean, the food and stuff we got at night was, when we worked late, they cater in like the best of the best restaurants. I mean, they treated us like royalty. That was cool. But look, I was dying inside. And I just told my parents, I can't live this way anymore. I don't care. I got to find something that makes me happy. And that's when I realized that, and I want to encourage everybody today, especially young people. I did this to my kids, is take a personality test. You can go online, get a free DISC test, DISC. And then once you see what you are, if you're a D and I or SC, then go back to Google and look up what jobs are best for a D personality or I personality, and then look on that. Because here's the thing: if you do what you love, man, do you think I mean, technically I'm working now, but I'm not, man. I'm just sharing my story, man. I'm having fun, and I guess what? There's going to be people out there that are listening. They're going to say, "Wow, I didn't even know that existed." I'm going to go, "Oh, I'm going to go talk to my agent," and that's cool. As long as I know I'm helping somebody. I can't get every dime out there, but if I'm, if I have somebody call me up and say, "Hey, I got this buyer that just got rejected because they had a 620 credit score," where do I go? What am I going to tell? I mean, I just, he's gotten so many seconds of rejections from all these other companies that you even wonder, do they want to lend in Black and brown communities? I mean, sometimes you wonder, is this steering still going on? Is racism still going on? I mean, I hate to bring it up, but then I bring it to him. He goes, "Oh man, this is a no-brainer." I'm like, "Really?" And he tells me what the deal is. I'm like, "That's crazy, man." But a lot of banks. So here's the thing too: that a lot of banks will not lend to you because if they think the area is a higher risk area, they're going to put all these extra requirements on top that makes you have to be a rock star with your credit score and everything and your history to qualify. The cool thing is Tomas has found these companies that are there to thrive, that want to lend in these communities, that want to help these communities. And I mean, my playground is the South Side, baby. I'm the king.
You are the king.
I am the king of the South Side, man. Like, long live the king. So heavy is the crown. But this is what this guy does. So this program, I mean, he's got all kinds of tricks up his sleeves that work. But what I love is just helping. Is just somebody, because everybody in the industry, realtors know I'm nuts, and I'm like, I'm driven. I want to help. I'm always studying programs. I'm always studying these. Everybody knows, because I talk at a lot of different organizations. They're like, geez, I didn't know that information. So they call me a lot of times, and to me, it just makes my day when I know I'm going to help them. And then Tomas says, "Hey, man, thanks for that referral. I appreciate it." And he doesn't even give me he doesn't give me a cup of coffee either. I'm going to start shaking him down for a cup of coffee. Seriously, just joking, brother. Just joking. All right. So
anyway. Tomas, so if it's an area that, say, a railroad is within a mile or half a mile, an expressway, and because we have lenders who don't want to lend in those areas, or it's high traffic, and you got us.
Yeah, and I've actually had a few situations where things like that have come up. I was dealing with a client that wanted to purchase a multi-unit. It was his first home, and the lender had essentially said, "Well, we're not going to lend on this because it's a little bit too close to a railroad, so that's going to affect the marketability of it." So I got commentary from the appraiser, essentially stating in layman's terms, "What do you mean we had 15 offers on this property?" And I mean,
that's what the overlays are. What I'm talking about.
Yeah.
When banks think it's too high risk, they will make it so impossible for you to get a loan.
So but before I was in this world of lending, I was, for lack of a better words, kind of an asshole in the retail side. Once I saw how much money was involved in the deal, how much management was making, I was honestly quite disgusted. And so I started calling the shots in the sense where I'm not going to let somebody else's pockets get in the way of my client closing a deal. I'm not going to let a company get in the way of me closing a deal. So what I started doing was just saying, here you go. I know exactly where the margin need to be so that everyone's happy. But I would also get in a lot of trouble because I'd be like, all right, deal with it. I know everybody's going to make some money. It may not be what you had hoped for, but ultimately, you're not my concern. My client's the concern. My client's number one. So that a lot of that is still with me today. I never want to put myself in a position. I will never let a company dictate me not closing a deal. Obviously, there's certain things I can't control, such as like if they don't have a job and they're at a 400 credit score, then we have some stuff we got to work on, obviously. But if it's a doable deal and I have a company tell me I can't do it, even though it fits the guidelines, that's not a type of company that aligns with my morals and values. And I had experienced that, and that was one of the shifts that made me become independent and create this model. I won't name the company, but I was working for a big box lender that was pretty popular in Chicago, and I was just trying to build my business. I was still relatively new to the industry at the time. I'm calling realtors, and I called one, and he wanted to work with me. I wanted to work with him. I was so excited. I was reporting to my boss. I had to do these pipeline meetings, and I told him the agent I wanted to work with. I'm like, hey, let's invite him over our next event. And in so many ways, he was essentially telling me that he was a waste of my time because he was in the South Side of Chicago, and all he's going to refer me is low loan amounts and people with low credit scores.
Oh,
and that didn't sit well with my morals and values at all. And then it actually set this fire underneath me. I immediately called, and I'm like, you know what? I'm done. I quit. That again, I immediately thought of my mother, and I'm like, so what if they want to buy $100,000 house? I know you guys do a lot, lot of higher purchase transactions, but I don't care if they're buying $100,000 house or a $3 million house. It doesn't dictate the amount of effort I'm going to give. I'm still going to give 110% all the way. I'm going to give you everything I have. So that's what really pushed me to focus on helping those that otherwise wouldn't have had a chance. And there was a report recently that just completely angered me. Navy Federal, which prides themselves on helping veterans, had a near 50% denial rate for minorities.
Yes, I saw
Are you
that.
kidding me?
I
I
saw
didn't
that.
see. Oh God, that's horrible.
Navy Federal's been getting a bad rep with their in their loans, period.
Yeah, they're
Their home loans.
slow to close, poor communication, deals falling apart last minute. And I deal with this all the time. And I want to be that person that catches them when these situations arise. And I hear it too often. Unfortunately, it is still very prevalent in industry where there are minority communities where, in my opinion, my professional opinion, a lot of loan officers just don't do their due diligence or throw up their hands because it looks a little bit too hard. And so my focus my entire career has been to help those people. And I love what I do. I really do. I live and breathe this. I'm always reading up on the industry and new things. I'm always trying to find that next best product to help serve
Told
those
you.
people. So I do this every single day. For me, there's no days off. It's always, hey, what can I do to be a little bit better than I was yesterday?
I like that. How long have you been loan officer?
I'm going on year 6.
Young blood.
Yeah.
Yeah.
I got in when I was 19. I was working at Sprint, and it was a good, sales foundation. I was in college, and it was fun. I was, burning myself out because it really did feel like a job. And I really wanted to get into real estate because, my uncle owns properties. My grandmother owns properties, and, I saw that they've done well for themselves. And I was like, I'm curious. I'm really good with numbers. I don't really know if I could, show houses all day, but I'm really good at numbers and knowing financing terms. So I found a bank that took a chance on me. And I remember day one, I was so intimidated, all these financial terms being thrown. I'm like, all right, I need to catch up. And I made it a point to learn as much as I could. And I'm looking around. It's kind of like a call center environment at the time. Everybody's making money, and I'm not. They kind of just threw me to the wolves, and I had to figure stuff out on my own. And so I learned a lot through failure. And thankfully, I was picked up by another company that provided me with an amount of training and coaching that most loan officers don't get so early on in their career. I had been trained by, now former VPs, CEOs, directors, people that otherwise wouldn't gotten training at those levels. So that built this foundation that essentially allows me to go in and run a mortgage company from start to finish, and at every single level. And so with knowing that, it's put me in a wonderful position to help others in a way that they probably don't get from an everyday loan officer. I can see things that an underwriter may not be able to see up front. When an underwriter tells me, hey, this loan's suspended, I'm like, just watch me. I got you. I know exactly what we're going to do here. Processors, for me, I'm very OCD with how the loan is done. And the number one thing that annoys me with retail lending is you have an offer accepted. Great. Congratulations. Well, next step is we got to get your disclosures out so you can sign your loan documents. You're aware of all the terms. Then we got to get your loan to underwriting. What most retail lenders are going to do, these are your big box lenders. What they're going to do is they're going to take the disclosures that you just signed. They're going to sit on it because they want to submit the most clean file possible to underwriting so that it keeps their turn times pretty consistent, which is great. But there's also a few things that are pretty routine. Like, why are we waiting on title work before submitting underwriting? Title work is just customary. I mean, it's on every single deal. Why are we waiting for insurance? Why are we waiting for the earnest money receipt? Why are we waiting for those very simple items that are going to be present in every single transaction? They're not deal killer items either. Why are we going to wait for those to come in before submitting underwriting? So now your file's spending 3 days in processing, then it gets submitted to underwriting. You've now wasted an entire week in the transaction. And then you have loan officers saying, okay, I think the underwriter might need this, this, and this. So then they're requesting information and documentation from the borrowers before it even gets to underwriting. Then the underwriter says, well, we actually need all this. And then you have a frustrated borrower that's getting all these requests for documents, and then their loan essentially was just sitting there for a week.
Hey, Tomas, tell everybody how fast you can close a deal if everything's all, good to go.
All right. The fastest purchase I've done is 2 days.
2 days.
2 calendar days for a clear to close.
You've had to have the appraisal and everything. Is that transferred over?
That one was transferred over.
So let's say one that, it's just starting out the gate with nothing ordered.
Fastest one has been 6 days. 6 days, and it was an FHA deal, and that was with a reinspection.
Wow. So I mean, yeah, I know he's done some of our deals like in 11 days. I mean, here's the thing. Here's what's important too. As a home buyer, I've got some of these loan officers. I want to just bang my head against the wall. They're like, okay, I'm gonna wait for the home inspection. And once that's done, then I'm gonna turn around and then order the appraisal. Then I'm gonna turn around and order the Nexus license or whatever So they wait rather than ordering everything up front. So then the deal takes 45 days to close. Where it could have taken half that time if they ordered everything at once. So when a loan officer tells me it's going to take me about 45 days to close, I know why. It's because of the way their systems are in place. Anybody, really everybody can close much faster. Now he pushes the envelope. There's a couple mortgage companies out there and only a couple that I know that order everything right away. So he's one of them. So it's like you got to get, if you trust the process and you trust. So the reason why they don't do that is because I'm going to save the buyer some money if the deal falls apart. Well, don't you trust your underwriting? Don't you trust your abilities to,
Right.
It's insane, man. But, the other problem is this, Karen, is that a lot of times the longer the deal goes, the greater there's an opportunity that the seller may change their mind or something may happen. And the seller may decide, you know what, I'm going to wait till spring. Or, you know what, I have this bill that just came up. I'm not feeling like moving right now. Where you lose that opportunity, that goal because of your loan officer. So your loan officer sometimes can make or break your deal, can make or break your opportunity. And imagine you work hard and to find a house, and maybe you spend a couple months till you find the perfect home, and then you order a home inspection and you order appraisal and you're spending all this money. And your loan officer, he or she takes forever because they thinking they're going to save you money, where actually they're putting you at a higher risk scenario. The lower risk scenario is let's close right away, and it's better for everyone.
Right, because I was always under the impression that it took the 30 to 45 days to close, whereas if you paid cash and you were closing, it would be within maybe 6 to 10 days. But
For title,
yeah,
right,
but-
and that's true with the cash deal. Is they got to order title, and then examine the title, and they may order survey as well too. Depends what they agree upon, and then the attorneys do their thing. They're like the kings of the trap. They sit on their thrones and like, we're going to close next week because I can, even though I know we can close today, but because I want to close next week. These attorneys run the show, a lot of times. So, a lot of times buyers are telling us, can we close tomorrow? I'm like, we're ready. You're ready. Everybody's ready except the attorneys. Get a new attorney, hire a new attorney. So, another thing I just love about Tomas, and if you can't tell, I'm very demanding. So whoever I have in my circle is going to make or break my brand, is going to make or break the transaction, and really, could cost the buyer tons of money. Can cost the buyer the ability to buy the house. So but you're right. I mean, most people think, hey, it's 30 to 45 days. That's because the loan officer creates their own system to slow it down. It's crazy, isn't it?
it is. Wow.
I mean, really, any mortgage company can do that. Can do it but a lot of mortgage companies say, no, we want to make sure this is done first. Then we get into this. Whereas if you order everything up front, you can literally close in 2 weeks. I mean, there's no reason in the world that you cannot close in 2 weeks. Crazy, isn't it?
It is.
That's the truth bomb. That may be the biggest truth bomb. So y'all, what we do a lot of times too with our contracts is we will test. So if it's another loan officer, we're like, no, we got to close in 3 weeks. And they're like, oh, okay, well, yeah, I can do that. I'm like, yeah, no kidding. I'm under my breath. No kidding. I know you can do it. So we have to push the envelope, because otherwise what these loan officers will do is they know they can close. If they got a contract that says 45 days, they're going to throw that contract on a shelf and let it run its course. And then when it gets close to the 45 days, then they all get up and start working like like crazy people to get it done. So by putting another pro tip out there for realtors, for buyers, and for sellers is push that closing date, and do not allow the loan officers to say, hey, I need 30 days, I need 45 days. No, you don't. So push the envelope and ask for 2 weeks, ask for 3 weeks. Have them earn their money.
So, for either one of you guys, so
Mhm.
for a new home buyer,
Mhm.
so with the programs that you offer, what would they be looking for, say, out of pocket? I know you got attorney fees and I guess for the appraisers. So what could they be looking for out of pocket?
Yeah, I'll take this one. So if they're using down payment assistance, there's going to be a few things that they have to get addressed before closing, such as their home inspection. While it's not required, it is highly recommended. Again, it's not like you buy a house every single day, and this is a large transaction. You want to make sure that your big ticket items are being inspected so you know the exact condition of the property. So that your home inspection.
That's going to be that's usually typically around 400, 450. And also, just to backtrack for a second, beat off what you're saying, you're going to have to put earnest money down to show you're serious. So usually you got to throw up $1,000. Sometimes you get that money back too. It's crazy.
Yeah. So, there's the home inspection, the earnest money, and then the appraisal. The appraisal, depending on the property type, is generally between $495 and, again, $800. Sometimes it can be as high as $800 if it's a multi-unit property. And with down payment assistance, I've seen people where they come to closing actually with nothing and get their earnest money back. And a strategy that we do is using the down payment assistance, the 100% financing, or we have, a few grant programs as well, and then having the seller cover the closing costs. And we've been successful in having our clients come to closing with nothing and getting their earnest money back. And in some cases, not only getting their earnest money back, but the tax prorations credits back as a check at closing. If they're not using down payment assistance, the minimum down payment is 3%. So 3% of the purchase price. And generally you want to budget for about 3 to 5% of the purchase price in the form of closing costs. This is going to cover any potential origination fee from the lender, your services such as your appraisal, credit report, title, recording fees, transfer taxes, your escrow account for tax and insurance, all that sort of stuff.
So let me jump in for a second. So let me put it from a monetary point of view. If you're buying a $200,000 house, so 3%, $6,000 for your down payment. And then there's another $6,000 to $10,000 for your closing costs credit. If you're doing like a standard with no grants, no seller closing cost credit, you need to get probably a minimum of $12,000, up front, just to be on the safe side.
Yeah.
You want to make sure you in your bank, you're either going to have that or have it by the closing. And whether that includes, any, you can use gifts as well too. And gifts can come from, why don't you explain gifts and explain the rules on gifts now? Because they just another bombshell.
I know that changed.
Listen to this.
Yeah. So gift funds, you can use them on conventional FHA and VA, and gifts generally have to come from family. With FHA specifically, they have updated their guidelines to follow conventional. What this means is that before this guideline change, let's say my mother wanted to give me my down payment and closing costs. Well, not only does she have to fill out a gift letter, but I also have to get a copy of her bank statement showing that she has the funds to gift me. They have to source and trace the gift funds as well. FHA has now has a new guideline change where now they need just the gift letter, and she can wire the funds directly to title company, and title just confirms that they've received it.
So a lot of times too, let me explain the practicality of this. A lot of times, so your family member is like, I got to give them the money now. What's going to happen? The deal's not done. So what's cool is they, you don't need to prove that it's coming from your whoever the source is, and B is it can be dropped in at closing at the last minute. So that's fun.
I have a question for you real quick.
Mm-hmm.
Have you dealt with a bifurcated closing?
Yes.
Okay.
I don't like those because it costs more for the buyer. The buyer actually ends up paying more because they got to pay for the second. So I've had it explained to me. So bifurcated is when the seller, no, typically the seller pays for the title report. And so what happens is a lot of these buyer's agents, they get on the payroll. So they get paid for using title company. So what they do is they push that title company. The problem is, guess what? The buyer is now involved in that fee. So it's going to cost them on an average. I've seen it cost a buyer an additional $1,800. The buyer's agent's like, I'm getting my money. I'm getting my $1,200, but it's at the cost of my client. So, well, the buyer doesn't understand the game. So what happens is whenever we get a situation like that, we call the buyer's attorney, and we're like, do you understand that your client is going to pay this extra money? And he's like, what? He goes, well, but the agent is going to make out. So the agent trades, see, there's no way. I don't do that. I never do. I don't, a lot of agents will come in, they want a nickel and dime everything. They want, hey, I want to get money off the title. So I'll sign. I mean, I can sign up for title, sign up for a mortgage company. I can, but the other thing too is the risk involved. So I'm involved in the risk. If there's something wrong with the title, I can get sued. Why would I, for $1,200? I mean, I don't know anything about title, about taking care of title. Why would I want to put my name on that either too when I don't let them, it's not worth it. And then I have to have my client take it up to wazoo so that I make a few bucks. It'd be different if they can use both title companies and my buyer doesn't pay an extra dime. Well, maybe we can have a conversation and I'll be on that payroll. And if I could figure out a way. The other thing too is I would have to get insurance. So I want to get insurance for the title insurance because I want to make sure I'm covered. So it's a very complex situation, but a lot of that but this is a hot topic. So guys, if you get a buyer's agent, they're pushing their title company, that's because they're making money off of you, and it's going to cost you. Now, if it didn't cost you, I wouldn't be having this conversation.
Wow. The reason why I bring that up is one of our lenders, United Wholesale Mortgage, they have a new what they call track program. It's their own essentially title service. Mm-hmm. And in comparing costs, clients can save a little bit over $2,000 on title fees because they do cap the settlement fee on that other title company. That's going to be happening with the settlement. Haven't used it just yet, but I wanted to get what your thoughts are because that sort of thing can get kind of tricky.
Yeah, I'm not familiar with their company and their title, but if you show me numbers where the buyer's not getting harmed and the seller's not getting harmed and everybody's happy, we're open to it. But really run it by me first because everyone I've seen with all the major title companies, the Chicago Title, Fidelity, First Am, all the big boys are, you do a bifurcation with those, you're going to pay, the buyer's going to pay extra. So maybe you guys have figured out a way to do it. So I'd be interested in exploring. See, then again, here's another new thing. Right. We're always looking to do things better.
So, Tomas, how can they reach you?
815-981-2702. That's my cell phone. Give me a call or text anytime. You could also go to www.loanswithtomas.com. There's a section there where you can actually click to schedule a phone call with me at a time that works best for you.
And Frank, how can you be reached?
Can I drop one last bomb?
One last bomb.
So this you heard this here first. It's not out yet. September 2nd. This is big. Uh-oh. September 2nd, the FHA is doing away with 2 appraisals. So if you have a house that, especially for an investor that bought and you wrote a contract within 180 days, within 6 months, the mortgage companies make you have 2 appraisals. That is going away. Now, what that helps is that helps with, who pays the cost, so sometimes, usually the seller pays for it, but we have the buyer pay for it sometimes. That cost goes away. But most importantly, when you get a second appraisal in there, you have a risk of the appraiser coming in low and killing a deal. Because, you get, look, you never know who you get for an appraiser. They could be out of the area. You could be on the south side and you got somebody up in Barrington that's never been on the south side that wouldn't even know the difference between Chatham and Washington Heights. You get them coming in there and they ruin the opportunity for a buy. I can't tell you how many times I've seen deals where buyers have lost the deal because the second appraisal came in and the bank said, hey, we're going with the second appraisal. We're not going to let you, we're not going to contest it. We have ways to getting around the low second appraisal, but sometimes you can't get around it. And so, okay. So anyway, so that's coming. So that's going to be a great value add for everyone. My name is Frank Montrow, aka King of the South Side with Keller Williams Realty out of Orland Park. You can reach me anytime at 708-307-0777. Karen, Earl, thank you as always for having us.
Thank you for having me.
Thank you for being here. As always, I am Karen Moneybag Stevens. This is the Financial Power Hour. You are listening to IntellectualRadio.com. We will be back Saturdays 3 to 5. We are out. See you next time. Peace. Have a great weekend.